Hello there. Lecture Series 16 of Bite-Sized Corporate Reporting is on IFRS 8 Operating Segments. This is a three-part lecture series. IFRS 8 applies to the separate or individual financial statements and the consolidated financial statements of a group with a parent, one whose debt or equity instruments are traded in a public market. That is either a domestic or foreign stock exchange or over-the-counter market, including local and regional markets, or 2. that files or in the process of filing the separate or consolidated financial statements with the Securities Commission or other regulatory organizations for the purpose of issuing any class of instruments in the public market. In situations where the financial report contains both the consolidated financial statements within the scope of IFRS 8 and the parent's separate financial statements, segment information is required only in the consolidated financial statements. Question: what is an operating segment? IFRS 8 defines an operating segment as a component of an entity, one that engages in business activities from which it may earn revenues and incur expenses. These include revenues and expenses relating to transactions with other components of the same entity. 2. Whose operating results are regularly reviewed by the entity's chief operating decision maker to make decisions on resources to be allocated to the segment and assess its performance. And 3. for which discrete financial information is available. It is important to note the following. The definition set out in IFRS 8 of an operating segment means that not necessarily every part of an entity is an operating segment. For example, corporate headquarters and some functional departments do not earn revenue and therefore are not operating segments. The term Chief Operating Decision Maker identifies a function, not necessarily a manager with a specific title. This is often the Chief Executive Officer or the Chief Operating Officer, but may also be a group of executive directors. If more than one set of segment information is used, for example, analysis of information by classes of business and by geographical areas, management must decide on a single set of components to be used as the segmental disclosures. An entity within the scope of IFRS 8 shall report separately information about each segment that meets the definition of an operating segment and exceeds the quantitative thresholds as set out in IFRS 8. It is possible to aggregate two or more segments that meet the definition as set out in IFRS 8 into a single operating segment if the segments have similar economic characteristics and the segments are similar in each of the following respects: nature of product or services, nature of production processes, type or class of customers, distribution methods used, and, if applicable, the nature of the regulatory environment, for example, banking or insurance. The second part of Lecture Series 16 will look at the quantitative thresholds as set out in IFRS 8 operating segments. Till then, thank you.